You guys have probably all heard the news of what's been going on with Tesla recently. Elon Musk has finally decided to break up with Donald Trump. The stock has dropped significantly in the past few days and is down over 14%. I'm going to give my opinion on Tesla stock and tell you guys if I think this stock is a buy today. Before I do a deep dive on Tesla's business, it's important to understand my investment philosophy. I want to own compounding machines, and as an investor, it's very important you understand the fundamentals of the businesses you own and if they characterize themselves as compounding machines or not. Now, the reason why every investor should own a compounding machine is because when you buy a stock, you want to own the stock for the longest period of time. You want to own the stock and have good returns in the long run. What I have laid out here is qualities of strong businesses, and we're going to see if Tesla meets all these requirements. The first requirement Tesla has to meet is if it has a moat. So the moat, or what's also known as a competitive advantage, is what a company has that stops competition from taking market share. What I also want to see is if Tesla has good management. I want to see the management being smart with capital, I want to see the company generating free cash flow, and I want to see strong growth in the sector. Lastly, we're going to look for a margin of safety. We need to make sure we don't overpay for a company because overpaying could lead to diminishing returns in the long run. Even if the company is extremely high quality, overpaying for a business could be detrimental to your investment. A high PE ratio does not necessarily mean the company is overvalued. If the growth justifies a high PE ratio, it might be a good investment. Going into FinChat, I'm just going to take a look at a couple of the key metrics. So I see here that the compound annual growth of the revenue over the past 3 years is 15%, which shows that the company seems to have good growth. I could also see that the PE ratio is at 168, which is an insanely high PE ratio. Their net margin is at 6.4%, which is very low, and all the return on equity, return on invested capital, return on capital employed seems to be decent. Considering Tesla is in the automotive market, it's very important to understand that the margins are going to be significantly lower than different sectors. For example, you may see tech companies that have margins of 50%, for example, and that's completely different compared to Tesla just because it's a completely different sector. Having lower margins is not necessarily a problem because there's plenty of companies that do good on lower margins. Take Costco, for example. Costco is one of the best businesses in the world and it has lower margins than other sectors just because Costco is a retailer. So take that into consideration. So diving a bit deeper into a few basic metrics, I see here that the total revenues of Tesla have actually declined recently. Over the past 2 years, the revenues have been declining, which is not something you want to see in a business. And especially if a business has a strong competitive advantage, you hardly ever see revenues significantly decline like this, but Tesla seems to be declining. So that might mean that this company is not as strong as we think it is. Companies that have strong competitive advantages and that are even monopolies tend to benefit from tough times. But it seems like Tesla is declining in revenues, and this is not something you want to see in what is deemed as a high quality business. Now, going into the total shares outstanding, I like to see businesses that tend to do buybacks or not dilute shareholders. Now, because Tesla seems to be trading at a very high valuation at this moment, it's not necessarily a good thing to do buybacks at this price. However, I see that Tesla is not significantly diluting shareholders over the past few years. What I also look at is the free cash flow generation, and this is one of the most important metrics in investing. I want to see if Tesla is generating significant free cash flow, and I can see here that the free cash flow generation seems to be very unpredictable. If we take a look at this on a quarterly basis, you can see that the free cash flow generation just doesn't seem to be that predictable, and this is a bit of a problem because I like to see predictable free cash flow growth. This is a bit of an unfair comparison because Tesla is a relatively new company and they only started to generate significant profits over the last few years. So maybe in the future they will continue to generate significant free cash flow, but as of now, it seems to be very unpredictable. We're seeing signs of margin compression in this business, and a lot of Tesla investors will tell you that Tesla has a huge competitive advantage over their peers and that they're the best EV makers in the market. But I just don't see that with this company at the moment. If this company was the best EV maker, their margins would continue to expand and we would see margin expansion. We would also see earnings continue to grow and profit continuously being generated, but we just don't see that in this company at the moment. What I'm seeing here is a company that had explosive growth during the pandemic and that benefited a lot from the push to government EV mandates. But it seems to be that competition is taking significant market share from this company, and it seems that the competitive advantage of Tesla is just no longer as strong as it was before. Now, many people will argue that I'm being unfair to Tesla and that all EV makers are going through a tough time at this moment. And I would tend to disagree with this statement because if we take one of Tesla's competitors, which is in China called BYD, Build Your Dream, it's a competitor to Tesla. Now looking at BYD's revenue, you can see that the revenue has just been continuously increasing, and although it's slowed down slightly over the past few years, you can see that this revenue has been increasing either way. It has not been declining like Tesla's revenue has. Even if we look at this on a quarterly basis, you can see that year over year, these revenues have been increasing. And BYD is facing a lot of restrictions. BYD has 100% tariffs here in Canada. In the US, these vehicles cannot be sold because the tariffs are just too high. So this is a company facing many headwinds, and yet it's still producing profits and it's still having significant growth. All while Tesla in the US is having a decline in revenue and decline in growth. Looking at BYD's margin, although they have a slightly lower margin than Tesla, you could still see that these margins are relatively stable. BYD is not trading at an insane valuation either. It has a 24 PE ratio. Some may argue that this comparison is a bit unfair because China's laws and regulations are different than here in the US and here in Canada. But the problem is that even though the regulations are slightly different, the company is still blowing Tesla out of the water at this moment. So this begs the question, if Tesla's metrics are declining, what warrants such a high valuation? Well, it all comes down to this man here, Elon Musk. So even though Tesla's EV sales have been significantly declining, Elon Musk is actually promising a lot of things in the future. So the future growth is priced in the company at this moment. And some expectations are quite reasonable. For example, if we take the growth expectations of EV sales, a lot of investors think that EV sales will stop declining and continuously grow down the next few decades. Because in many countries, governments are pushing for EVs, a lot of sales for EVs will probably come from Tesla, and that would result in significant growth in their EV sales. But this is where I think that the positive growth prospects stop, in my opinion, because you obviously have Elon Musk's influence that pushes the company's valuation up quite high. And I honestly think this is very unreasonable because a CEO could make as many promises as he wants. But what really shows is the numbers, and currently Tesla's numbers are just not that great. The sales in EVs are declining, the revenue is declining. Those are not great numbers. So regardless of what Elon Musk says, the sales are declining and he has to fix that. So as a CEO, he would have to take action and fix these fundamental problems with the business. And having a CEO go out on Twitter or go out on X and talk about his political opinions and get involved in politics is not something I want to see with a CEO. You're not going to see the CEO of Visa, for example, go out and publicly shame Trump and give his political opinion on Twitter. So you want to have a CEO that takes control of the company and not publicly blast people on social media. And I feel like Elon Musk has a significant problem with this. So you have Google over here trading at a 19 PE ratio, and Google currently has robotaxis on the road driving fully autonomously. So you have Tesla that has 0 robotaxis on the road currently, and you have a company like Google that has operating robotaxis on the road at this moment, operating fully autonomously, and Google's PE ratio is at a 19 when Tesla's is over 100. To me, that makes absolutely no sense. I feel like this is something Tesla investors should acknowledge. If you're going to say that Tesla is the future for robotaxis, at least acknowledge that Google has fully autonomous vehicles currently on the road and give Google the appropriate valuation. We encounter one of two problems. Either Google is extremely undervalued or Tesla is extremely overvalued. I'll let you be the one to judge. Now we get to the last point of why I think Tesla is at such a high valuation. It's the new autonomous robots, or Optimus. For those who don't know what Optimus is actually the humanoid robots that Tesla is developing. And there's a couple fundamental flaws with the argument that Tesla has such a high valuation because of Optimus robots. The first problem is Tesla is not the first company to do this. There's many companies out there that actually already are more advanced in robotics, such as Boston Dynamics. There's Amazon that is actually one of the leading developers in robotic technology. And just to put it frankly, Amazon has actually been using robots and autonomous robots in their warehouses. I would argue that Amazon actually has the lead in robotic technology and they're the leaders in this market share. Yet Amazon is not priced at a 100 PE ratio, it's priced at a 34 PE ratio. And I don't even think that PE ratio is telling the full story because Amazon is investing heavily in growth. I would argue that if Amazon prioritizes profits, that PE ratio is significantly lower. So to all the Tesla investors saying that Tesla is priced because of their robotic technology, then my argument would be, why is companies that are leading in robotic technology not priced at the same multiples? Arguably, there's many more impressive robotic companies out there. Like take Boston Dynamics, for example. This is a company that's been in robotic technology for decades now, and they have very advanced robotic models. Looking at this robot do certain tasks, I find very impressive. And this this could definitely be the future of robotics. So as an investor, we have to ask, what makes Tesla the winner in these sectors? What makes Tesla the winner in robotaxis? What makes Tesla the winner in AI? What makes Tesla the winner in EVs? Just because they are first developers in certain technologies does not necessarily mean they're going to be the winners in the long run. Tesla is not a cheap company either. It's trading at a free cash flow yield of 0.71%, and it has an earning yield of 0.6%. So you're paying a lot for this company that is yielding very little cash. Obviously, this company is priced based off future growth expectations, but there's so many other companies doing the same things, and yet they're not priced at these insane multiples. So what warrants Tesla being priced at such a high multiple when Google, Amazon, Meta, and all these other companies are trying to advance their technologies too? As an investor, I see hardly any margin of safety when investing in a company like this. Not only is the company extremely volatile, it's relying on one person as CEO and future promises, and it's also relying on specific technologies that may or may not achieve growth. As an investor that wants to find compounding machines and wants to buy some of the highest quality businesses in the world, I just can't see Tesla as a solid investment. I think anyone investing in Tesla is taking on a significant risk, and I think investors need to be very cautious when investing in these companies. Now, I'm not saying that Tesla will go to zero and it will have no growth whatsoever. I'm just saying that I don't see the fundamentals of this company reflect the price. For a company to have such a high multiple, it has to have strong fundamentals, it has to be a monopoly, it has to have strong growth drivers, and I just don't see these things for Tesla. I see a company that has sales declining. I see a company that has the CEO getting involved in politics and getting involved in controversial activities. I see a company that is operating in a very competitive space and is trying to gain market share. And remember, the automotive sector is a very difficult sector to be in. The margins are low and there's not much opportunity. Some of the worst stocks to buy are actually in the automotive industry. You have companies like Ford that have reached all-time highs back in 2000 and have never reached those all-time highs again. And even this company is trying to get into the EV space. All car companies are trying to get into the EV space, but Tesla is the only company I see that is evaluated at such a high multiple. You're not going to see Ford trade at a 120 PE ratio just because they're getting involved in EVs. So my conclusion for Tesla is that it's a very risky business, and all the growth drivers that are priced into the business are not currently making any profit yet. Now, the goal of this video isn't trying to bash Tesla or try to put down anyone's investment thesis, but I'm just here to explain what I think of Tesla at this current price and if I think it is a buy or not. I hope you enjoyed this video. Have a great day.